Hello everyone and welcome to Akira's Academy of Accounting and Finance, and in your second chapter today we are going to discuss about the remaining topic. Okay, the first one that we are going to discuss is about adjustment for accumulated profit and losses. Okay, now when we discuss this there is this reformation of everything. Okay, the partnership form is being reconstituted when a new partner enters into the business. So like whatever reserves are there, whatever accumulated profit or their loss or there, that will be distributed. Till now that profit belongs, that reserves, all these things belongs to whom? They belongs to the existing partners. Okay, the new partner doesn't have a share in all these things. So whatever reserves and provisions they are having, their reserves and provisions are being will transfer it to whose account? To the old partner's capital account. Likewise we discussed about it, right? Goodwill. Okay, that goodwill amount also, if the goodwill exists in the books, that goodwill we need to close it and transfer it to the capital account of the old partners, right? Because that goodwill we need to write it off during that period. So similarly when we are talking about the provisions, we are talking about the reserves, that reserves also belong to the old partners, right? And that reserves and that provisions will be transferred to the old partner's capital account. So what will be the entry? We need to close that reserves and provision. Let's say A and B are partners. A and B are partners in the ratio of 3:2, right? There is a general reserve of 50,000. Now this 50,000, C enters, C got 1/4 share, right? Now their profit sharing ratio will also change, but this reserves belong to the old partner. There's nothing to do with the new partner. There's nothing to do with the new profit sharing ratio. No, we are not going to take these things into account. What we are going to take into account? The old partner, the provisions, reserves belongs to the old partner. So those reserves and provision will be distributed among the old partners in their old profit sharing ratio. Likewise we distributed the existing goodwill in the business. So this reserve is 50,000 and there is a loss. Okay, there is a profit and loss account, and that is having a debit balance. That means it is a loss of, let's say, 25,000. Okay, now this reserve goes, we have to close that account, so it will goes to A and B's capital account. So reserves have a it's on the liability side, it has a credit balance, we need to close it. We will debit reserve, so general reserve account debit 50,000 to A's capital account 50,000, that is 30,000, and to B's capital account 20,000. Correct? Similarly we need to close this profit and loss account. Okay, this is an accumulated loss, we need to transfer it. So this is having a debit balance, we need to credit it, right? And A's account and B's account will get debited. So A's capital account debit 25,000 divided by 5, 15,000, and B's capital account debit 5 to the 10,000 to profit and loss account 25,000. That's it. Okay, this was related to this much only. Old things belongs to the old people, give it to them, right? The next we are going to talk about the revaluation of assets and reassessment of liabilities. Likewise we discussed that the whole organization, whole firm is being reformed, right? So the assets and the liabilities, they carry the old value. Okay, where at the time the assets that they purchase is, that is belongs, when they purchase it at their purchase price, at their cost price, it is belongs to the historical value. But now there is a reformation, a new partner is entering into the business, so there could be a chance that at the present time, at the current situation, the values of assets might have changed, or the liabilities, there may be certain liabilities which we have not recorded, or there is a reduction in certain amount of liabilities. So all these things we need to revalue them. Okay, now when we revalue them, there could be the four possibilities. Okay, there could be assets, that assets could have increased or assets could have decreased. Similarly, when we talk about liabilities, liabilities could have increased or liabilities could have decreased. Moreover, there could be an unrecorded, we forgot to record certain assets, or we forgot to record certain liabilities. These four situations could be there. Okay, now when we say like these assets, okay, now we need to prepare one revaluation account. Revaluation account, and the effect of all these things we will give into the revaluation account. Okay, these things have been revalued, they are now being shown in the books at the current value. Okay, whatever is the present value of all these assets and liabilities, we are going to show them in the books at the current value. So whatever effects have been there of assets or liabilities, we are going to show it in the revaluation account, and on that revaluation of assets and liabilities, there could be a gain or there could be a loss. Okay, and that gain and loss belongs to whom? To the old partners. This belongs to whom? To the old partners. Okay, and that will be shared among the old partners in their old profit sharing ratio. Okay, now when we talk about assets, let's say there was an increase in the value of a certain asset. Okay, when there is an increase in the value of asset, what we need to do it, we need to increase its value. Assets will be shown at a at a higher price, at the current price. Okay, so when we increase the value of asset, what we do, we debit them. Okay, and if we want to increase it, what we will do it again, we will show it at an increased amount asset. Let's say there was a building. Okay, the building value is in the books is 50,000. When they revalued, the new value comes to 60,000. Okay, this is the old value, this is the new value. Now we need to increase this amount. Okay, so what we need to do, what we will, the difference we will transfer it to the building account. We will debit building account, building account debit, and this 10,000 is what? This 10,000 is gain. Okay, so we will transfer it to revaluation account. Okay, so let's make a revaluation account. Here we will transfer this amount by building 10,000. Okay, similarly there could be a increase or decrease in the value of the liabilities. Let's say there are certain creditors, we got to know that they are going to give us a certain discount. Okay, now there is a reduction in the value of liabilities, right? So that reduction, liabilities, let's say certain creditors. Okay, they were creditors of 20,000. They are going to give us a discount at a rate of 10%. So now the value changed to 18,000. Okay, there is a reduction in the value of creditors. Credit side, credit balance, what we need to do, we need to reduce it. What will be the effect? We will debit them. So creditors account debit 2,000 to revaluation account. Okay, this is also a gain which will be transferred to the revaluation account on the credit side. So by creditors 2,000. Okay, now there could be an unrecorded asset. Let's say we sold the goods, right? But we forgot to record. We sold the goods on credit, but we forgot to record it in the books, right? So that unrecorded assets we are going to show. When we sell the goods on credit, we sell it to the debtors. Okay, we forgot to record debtors worth rupees 5,000. Now we need to increase the debtors. What will be the entry? Debtors account debit 5,000 to revaluation account 5,000. Okay, revaluation account on the credit side we are going to show the amount debtors 5,000. Now let's say there is an unrecorded liability. There were bills payable and we forgot to record the bills payable amount in the books. Okay, so that is an unrecorded liability. We need to show it in the books now. So that bills payable, it's a liability. We need to credit it. So what we will debit? Revaluation account debit. Let's say the bills payable amount is 8,000. Okay, so 8,000. So this where we are going to show on the debit side, to bills payable account 8,000. Correct. Now is it having, this is the credit side, this is the debit side, is it having a credit balance or a debit balance? Credit balance means what credit side is more compared to the debit side. If it is having a credit balance, that means there is a gain. Okay, we transferred all the gains on the credit side and all the losses on the debit side. So if there is a gain, that gain will be transferred to the old partner's capital account. Let's say how much it is. It is 17,000 here and 8,000. So by now this is a gain there is a gain of 9,000. Okay, this 9,000, let's say, will be divided between the two partners A and B in the ratio of 1:1. So this gain will be transferred to A and B's capital account. So revaluation account will get debit to A's capital account. There's 9,000. A half of 9,000 is 4,500, and to B's capital account 4,500. Okay, so this will be transferred to A's capital account 4,500 and to B's capital account 4,500. Okay, now the books will be showed at a revised value. We revised the value of everything. The building will be shown at a revised value of 60,000, creditors at 18,000, debtors we will record them. So 5,000 increased value of debtors. Moreover, bills payable we need to show it in the books of rupees 8,000. So this is how we are going to give the effect. Goodwill transfer to the old existing goodwill, minded existing goodwill, not the premium of goodwill which the new partner brings into the business. Okay, not that goodwill. Premium amount will be transferred between the new old partners in their sacrificing ratio. What I am talking about right now is the goodwill amount which already exists in the book. That goodwill amount we need to close it, we need to transfer it to partners capital account in their old profit sharing ratio. Everything, their accumulated profits and losses, that also we will transfer to their accounts in their old profit sharing ratio. This reevaluation of assets and liabilities, whatever there is a gain or there is a loss, this will be transferred between the partners in their old profit sharing ratio. Understood? This is clear. So now we are going to discuss about the third topic, that is adjustment of capital. Now let's say there were two partners A and B. These are old partners. Okay, C is a new partner Okay, he comes into the business. Now what they decided, whatever capital amount C is bringing into the business, accordingly our profit and loss will be shared. Okay, not profit and loss, accordingly will be our capital amount. So old partners, if they have less capital amount, they are short of certain capital amount, they will bring in more capital, and if there is an excess of capital, they will withdraw that capital amount. Let me explain you with an example. So there were old partners, okay, sharing profit and loss in the ratio of 3:2. C comes into their firm and he brings 1/4 share of he will receive 1/4 share of profit, right? Now when C enters into the business, he brings, let's say, 60,000. Okay, and A and B capital was A's capital, B's capital are 30,000 and 20,000. Okay, this was their capital amount. Now C brings in 1/4. So this is the whole firm share should be how much? This is 1/4 is 60,000. So the whole share should be how much? 60,000 into 4 divided by 1, that is 2,40,000. Okay, let me just correct it. This is 2 less value, right? 80,000 and 50,000, correct? Now we will determine what is their new profit sharing ratio. So A and B give one, C will receive 1/4, so the remaining share is how much? 3/4. Okay, now out of 3/4, how much A will get? A's share. Okay, out of 3/4, 3/4, earlier it was 3/5, so it will be 4 5s are 20, 3 3s are 9. B's share will be how much? 3/4 into 2/5. 5 4s are 20, 3 2s are 6, and C is 1/4. We need to make the denominator same, so 5/20. So now their profit sharing ratio is how much? 9:6:5. Correct? 9:6:5. So 2,40,000. 2,40,000. So A's capital should be how much? 9/20. 0 0 1 2s are 12 2s are 12 9s are 1,08,000. Correct? B's capital should be how much? 2,40,000 into 6/20. 1 2s are 12 2s are 12 6 are 72,000. And C's capital should be how much? 240 into 5/20. 0 0 1 2s are 12 2s are 12 5s are 60,000. Okay, this should be their new capital. Now earlier it was how much? A's capital 80,000 and B's capital is 50,000. Both are short of certain amount. 1,08,000 should be A's capital amount. How much it is? 80,000. So how much he will bring? 28,000. B's capital 72,000. It should be 72,000 as per the new capital that they have calculated. But how much it is? 50,000. So B will also bring 22,000 into the business, into the firm. So cash will come, cash account debit 28 plus 22 is 50,000 to A's capital account 28,000 and to B's capital account 22,000. Okay, now this is the one situation. Maybe there could be a situation wherein, let's say, A's capital is not 1 lakh How much it should be? 1,08,000. It is 1,20,000. Okay, and B's capital is 50,000. Now it should be 1,08,000. It is in excess. Okay, 1,20,000. It is 1,20,000. It should be how much? 1,08,000. That means what he will do? He will withdraw 12,000. He will withdraw 12,000 rupees, and B will brings in 22,000. The same amount. He will brings in same 22,000. Now for A's, what will be the entry? He needs to withdraw that amount. So A's capital account debit 12,000. Cash will goes out from the business. So to cash account 12,000. Similarly for B, the same entry. B is going to bring in the cash into the firm. So cash account debit 22,000 to B's capital account 22,000. So this is how we are going to adjust their capital according to the the capital which C brings into the business. There could be a situation that this amount could be, we need to this amount we need to find it out. There could be a situation that maybe it could be the same, one of the capital amount is same of one of the partners, so he will not bring, okay, only one partner bring in the cash into the business, or one partner will take out the cash from the business. Now the fourth topic is change in profit sharing ratio among partners. There is no admission of a new partner into the business. Okay, in this situation there is no new admission, no admission of a partner. This is about the current partners. Now the current partners decided to change their profit sharing ratio. Why? There could be a situation there are two partners who are actively working into the firm, but one of the partner for some reason could not actively work in the firm from now onwards. So what they decided to change their profit sharing ratio. Earlier also when we discussed, when the reconstitution is being done, whenever there is a change in the profit sharing ratio, when there is an admission, retirement, death or dissolution, so there is a situation wherein they are changing their profit sharing ratio. Now when they are changing their profit sharing ratio, whatever we did earlier, the same thing we need to follow. Let's say A and B were partners in the ratio of 3:2. Now both of them will get actively involved in the firm. So A and B will decided to share their profit and loss in the ratio of 1:1, right? Now in this situation, one partner will be gaining and one partner will be sacrificing its profit. Now obviously in this situation also we will value the goodwill amount, and that goodwill amount will be distributed among the partners. Who is sacrificing his profit, he will get that goodwill amount, and the other partner will gain it. He has to bring that premium amount. So A and B, now we need to find out their sacrificing ratio. Okay, what is sacrificing ratio? Old ratio minus new ratio. Old ratio of A's, let's say A, old ratio was 3/5, new ratio is minus 1/2. It will be 5 2s are 10. We need to make the denominator same. So 3 2s are 6 and 5 1s are 5. So 1/10 is the sacrificing ratio. Okay, A is sacrificing 1/10 of his share, and B, obviously the opposite of it will be, earlier old ratio of B was 2/5, and now he is receiving half of the share. So 2 2s are 4 minus 5 divided by 10. This is minus 1/10. That means it is a gain. B is gaining. Okay, so it's a gain ratio. I'll not show it in minus, but this is the gaining ratio of B, and A is sacrificing. So they determine the value of goodwill. We discussed how to calculate the goodwill. Similarly, they calculated the goodwill. They reached to amount, let's say 5,000 is the goodwill amount. Now this 5,000 A is sacrificing, so A will receive, it will be transferred to its capital account, and B is gaining, so B needs to share that amount. He is gaining, okay, profit, so that B's capital account will be debited. So what will be the entry? B's capital account debit to A's capital account. Here A is sacrificing his profit, so A is going to receive this goodwill amount. So A's capital account will be credited by 5,000, and B is going to gain, he's going to gain profit into the firm in future, more profit, so he needs to reduce his capital amount, so B's capital account will be debited. Okay, and whatever we did earlier, like there's an adjustment for accumulated, if there is a goodwill which is existing in the business, that goodwill will be distributed among them in their old profit sharing ratio. Similarly, there is an adjustment for any accumulated and profit or losses, that will be adjusted in their old profit and loss ratio, old profit and loss sharing ratio. They need to revalue, there is a reconstitution of firm, so everything, there is a revaluation of assets and liabilities. On that revaluation, gain and or else loss will be distributed among them in their old profit and loss sharing ratio. Whatever these things are, these things will be distributed among them in their old profit sharing ratio. This is the new profit sharing ratio. And their capital account, like whatever goodwill amount will be there, the new goodwill, okay, not the old goodwill. Here I am talking about the old goodwill which already exists in the business. Okay, now this is the reconstitution of a firm, so this is the new goodwill amount. This new goodwill will be whoever is sacrificing his part of profit, he will get that goodwill amount, his capital account will be credited, and the one who is gaining that, he needs his capital account, that amount will be transferred from his capital account to the sacrificing partner. So these were the remaining 4 topics in your second chapter. I hope you got all these things. For all these things, you just need to practice, practice and practice. See you in the next video, wherein I'll give you the revision of your second chapter. Till then, thank you very much.